So, good morning, and looking forward to the day ahead. Let's review yesterday, first of all, and I'm just going to show you. I mean, we had, let's maybe bring the DAX in here to just talk about how yesterday's session panned out. So here we're looking back over the last couple of weeks. And obviously it's been a very strong upside, and if we were just to show you the daily chart, just to get this in perspective, we're almost back to the September high here. After yesterday's bullishness took us up above the early September high, but ultimately just another sort of, let me see, we were about 80 points short of the key top here in September. The DAX has been higher than that this year, and the higher the year is back over 10,000, so 10,056 back in June. So it's been a fairly remarkable couple of sessions, or really couple of weeks, if you think about the DAX back on the 17th of November, testing the November low, and indeed making a new low for the month at 9,122. And then here we are just, 6 sessions later, and this market's 700 plus points higher. So it has been an impressive drive to the upside, and of course the last two sessions, Draghi and China rate cut fueled rally on Friday, and then we added to it yesterday. If we just zoom in a bit on yesterday's action, then it really all came. Well, we had a bullish start, which kind of got given back, but the bullish start off the back of the Asian session, but then it was really the 9 a.m. data that took the DAX up a level with better than expected IFO data. And it was better than expected, and it was a relief that it was better. It was the first time in 10 months we'd seen an improvement in the business outlook. Remember, this is the survey for business leaders. Sorry, let me just move some of these lines. This is the survey for business leaders. Some of these levels are old, guys. Sorry, I'm just going to adjust these. And so it's important data, and it came in nice and solid, and we popped higher. But really, that was about it then. After that one pop higher at 9 a.m., it was basically then a day of consolidation. So actually, it was quite nice range trading yesterday, and indeed, this morning at the open, we've tested the top side of this range, the high point we had yesterday morning. I know we blipped briefly up through there off the cash open in the US yesterday, but as it stands now, this range is still intact, and we're bang in the middle of it. The pivot level's done a good job. That's the low of the morning so far. So it was German data reassuring us that at least things aren't getting worse, and we've had a German data release this morning at 7 a.m, which was the German GDP reading for quarter three, the second preliminary reading, and it came in line, exactly the same as the first reading, at plus 0.1%. And so perhaps that idea that Germany are going to slide into recession, that risk is just petering out. And what are we left with? Well, nothing major. We're left with basically the idea that we're going to get stagnation, no growth. It's not like we're now suddenly... This data hasn't been good enough to expect a real strong rebound to positive growth. It's like at least it's not getting worse is the kind of feeling. Now, when you add in the fact that Draghi was very dovish on Friday, this helps people believe that perhaps as we hit 2015, there can be a stimulus injection that can get the German economy back into life. Now, what was interesting about the back end of yesterday's session was the hawkishness that came out of the ECB, with firstly Nowotny, who's the Austrian governor, and then Weidmann, who's the German, the Bundesbank, head of the Bundesbank. Both of these two came out with hawkish comments that undermined Draghi's comments from Friday. Nowotny essentially saying that, whilst there's always potentially a need for more stimulus, I don't see any urgency, I don't have any time frame for it. And Weidmann went a step further and really said, well, actually, we shouldn't be focusing on monetary stimulus, we should be focusing on structural reform. And anyway, sovereign purchases, is it possible there are legal hurdles in the way? And so it was dovish, and this is why we got the sell-off into the close, the European close last night. Now, it wasn't very dramatic, and in the end we stabilised, and in fact, as we went into the US close, we got a nice pop higher up towards the top end of the range again, and here we are. We're just chopping around still in the range from yesterday, but just be aware, this is, I'll go back to the daily chart, this is right up, if it'll let me, this is right up at the top of a phenomenal V-shaped rally. Key resistance, though, yet to be tested. Key resistance properly comes in just shy of 9,000, or yeah, just shy of 9,900. So really, yesterday was mostly about the German data in the morning, adding to the upside, and then we got some US data in the afternoon, which was a touch worse than expected on the manufacturing side. On the services side, I should say. The services PMI was a touch worse, but that didn't really seem to matter. The mood the S&P is in, or I should say the mood the Nasdaq is in, because it was the Nasdaq that was leading, or at least I would say preventing the S&P from selling off in tandem with the European markets into the European close. I was talking you through this. We had that battle with Nasdaq positivity and sort of DAX negativity at the same time, and ultimately the S&P was caught in the middle and eventually went nowhere. Now, overnight, again, we've tested yesterday's high, so 2069 reconfirmed, strong resistance. Let me add in a level here, because the bottom of the range is quite similar to the DAX yesterday. We popped higher off the 9 a.m. data, and then we've been in the range ever since, and we're in the middle of it right now. So our range is only 5 points wide. This is very tight. There's a very tight range, but whilst things remain calm, you may well expect this range to continue. But we do have some fairly interesting set of data out of the US this afternoon, so I can't imagine we can stay within such a tight range when we start getting key news flow coming in. Now, check out the euro dollar. Testing yesterday, or the overnight high, yesterday's high, right now as I speak. So we've just had a little bit of a lift in the euro dollar. And this is also I've just got a short-term fib on this, just Friday's range, really. I mean, it's not the best fib series in the world. You actually really probably should take that high point from the 19th. So actually, let's do that and see where that fetches us up. Yeah, so I have got a fib level in here, but perhaps it's really more to do with the fact it was the 17th of November low, which capped the upside yesterday into the European close and then again into the US close, and we're back here testing it now. So this is that. Remember, the big sell-off here was because of Draghi and his dovishness, and we had some of that unwound yesterday by Nowotny and Weidman. We're just testing this level now. Let me just check in. Maybe it is a touch of dollar weakness, but as well a bit of euro strength in this, I think. Cable's been a bit lively this morning. We had a sharp move to the downside, and we've rebounded, and we're now making, well, not quite new highs for the day, but new highs for the European session. So just be aware of this. The dollar's on the back foot here. Euro dollar testing key resistance. Yesterday's double top plus 17th of November low. So the news flow this morning has mainly just been that German GDP figure. We've also had French data, and perhaps this is helping with the euro, because the French data was for once better than expected, and this was manufacturing confidence data. It's not headline data, this, but I mean, it is of interest given that it's from France and it's better than expected, which is not something we're used to. French data has typically been fairly depressing in recent times. So the number came in at 99 versus the expected 97. They also raised and revised up previous month's figure from 97 to 98. So maybe that's helping a touch. We had a decent session. Well, the Chinese Shanghai Composite made a 3-year high overnight. Again, further, I guess, fallout from the fact that China cut rates on Friday. We've seen money market rates drop quite sharply, alleviating some of the pressures there. And another thing of interest yesterday,